pretty quickly. So I don't have any issues in case we do go over time. So let's go ahead and get started. Let me just make this a little bigger. Okay, so here we're going to go ahead and do chapter 7 and 8 exercise. You guys can all see my screen, is that correct?
Yes.
Okay, perfect. So question number 1 is that your inventory method is perpetual and it is moving average. Okay, so we practiced this already. I made it the easiest one so we can process this a lot quicker, but let's just go ahead and do it. Okay, so with that being said, all right, so on May 1st, what has happened here?
Purchase 500 brown mug.
Okay. Okay. So here I want you to go to your general journal first before going to the inventory worksheet. Oftentimes what happens is that a lot of students, they'll go straight to the inventory worksheet and completely forget to journalize the journal. So let's go ahead and let's lay down the foundation of what just happened and then proceed to the inventory worksheet. Okay, so here the information is that we made a purchase, right? For 500 brown mugs at $2.65 with a freight of $100. Okay, so general journal, right? We're going to put the date of May 1st. What has happened here? What did we do?
Purchase.
All right, so how do we journalize using perpetual inventory?
Inventory.
Inventory. In this case, we know specifically what it is, right? Mugs. There you go. So I'm going to go ahead and just put mugs. Good. Okay. How did we pay for it?
On account.
On an account. So therefore my credit should be
Accounts payable.
accounts payable. Good. All right. Here, I'm going to go ahead and place the vendor's information. So here, so I bought it from Cuppies Co. Okay. And how many items did I buy?
500.
At what price? $3.65. All right, each. And then lastly, was I given terms?
Yes.
Yes. So in this kind of sense, it would be good to journalize it so that when you are looking at journalizing, it makes sense because then I can keep track of when the discount period is due and also what the percentage amount is. So in this case, it's 5%, 15, net 30. So that's something I'm going to add into my journal, okay, as a piece of information that I do think is pertinent. So 5%, 15, net 30, okay? All right. So if I purchased 500 cups at $3.65.
The cost is 265.
$2.65, okay. $2.65. Okay? So then what is going to be my total inventory that I am placing in here?
1425.
$14.25. Is that including the freight?
Not yet.
Okay, so remember, this is inventory, right? We're not doing our purchase expense and our freight expense separately. Everything's just going to go straight into inventory. So what is going to be...
1425.
Okay, so in this case, I'm going to go ahead and just place a formula here. Okay, I'm going to multiply the 500 by the 265, and then I'm going to add 100 for the freight. So I should have 1425. Okay, and then lastly, what is my accounts payable going to reflect? Okay, they should be the same here. All right. Now we got to go into our inventory worksheet because we have inventory, right? We received the items, we purchased them, and we have them. So here, May 1st, we're going to go straight to the quantity. So we purchased 100 items at $265, with the freight costing $100. So what
Hey,
is
you
my
mentioned
total? I'm sorry?
500.
Sorry, 500. All right. So what is going to be my total purchases?
1325.
Okay, and then what is going to be my total cost?
1425.
And then my cost, do I need to do a cost per item?
Moving average. Yes, because that's our first purchase.
Correct. So here, I calculated it. It is $2.85 even. So again, I'm going to go ahead and transfer this piece of information into my inventory on hand, right? I need to make sure that my formula is now in my cost per item because this number again is what we're going to be constantly calculating. Okay, good. So then what has happened next?
You return 15 broken mugs for a full refund.
Okay, so again, here on May 5th, we decided to return 15 broken mugs for a full refund. So how are we going to do this?
Accounts payable.
Okay, so we're going to journalize. Okay, good. We're going to journalize that because we're decreasing our inventory. So on what date was this? May 5th?
Yeah.
May 5th, right? We're going to reduce the amount that we owe because we're getting a full refund. We haven't paid them yet, so therefore we're just going to actually reduce our liabilities. Okay? How are we going to return the items under perpetual inventory?
Inventory or mugs?
Yes, we're going to take it directly out of our inventory because that's where we placed everything in the first place. So I'm going to go ahead and put mugs. Now, how many mugs did I actually return?
10.
15.
How much? 15.
And how much did it cost me per each mug?
265.
Okay, for full refund. Okay. So in this case, So in this case, where am I going to be placing, or how much is my total accounts payable for?
3975.
$39.75. So one thing I forgot to do is that I have a chart of accounts right here. This is how you know what accounts to use. So I forgot to mention this. So now let's go ahead and just actually fill in what we know. So if we're doing an accounts payable, right? Accounts payable is account number 201. We have mugs for number 150. So let's go ahead and apply it here. So PR is going to be your post reference of where you're placing these items. So in this case, I'm going to just go ahead and fill it in, but it is definitely something that we are going to practice. So from here on out, that's definitely something that we need to look at. Okay. And here I have my finishing little message here. Now, let's go ahead and enter this into my inventory worksheet. Let's talk about how. How are we going to place this in our inventory worksheet? Where, how am I going to place this into my inventory worksheet?
Inventory on hand. No.
Inventory on hand. You can do that straight away. But what else can you do?
Deductive from the purchases.
We are going to subtract it right out from the purchases. So here, this is what I'm going to do, just to show that this is what it's going to be, right? So we returned 15 broken mugs, right? What was the total cost for the mugs?
$39.75.
So here you go. I'm going to go ahead and place that negative number so you know you made a return. And it's supposed to be for the $39.75. So therefore, I'm going to come over here and I'm going to go ahead and subtract out that number. So 500 plus the negative 15 should give you how much remaining?
460.25.
460.25. So you calculate this one right here. Nilo?
Sorry. Fine. So, less. 940.
940. Where are you getting this 940?
For one. So, two, less
1385.25.
1385.25.
Oh, right. I added. My bad.
1385.25.
1385.25. Yes. Okay, good. All right. And then now what is my new average cost per item?
$2.85.
Still 2.8561. So because we had to make a return, right? We didn't return freight because you can't return freight. Once something's shipped, you can't return freight. So in this case, I'm reducing the amount of purchases I'm doing, but I'm still keeping the freight. So therefore, I need to spread the freight across amongst each item. So in this case, I've done that. I eliminated it, and now my new balance should be 485 at 1385.25 with the new average cost per item should be 2.856. Okay, so that's what happens when you're dealing with returns of items. Now, again, if you're doing LIFO and FIFO, it really depends on what is available. Because if you sold something already, then you're just going to have to take it out to accordingly which one came either first or last. But in this case, I'm doing moving average. I only have one batch. It doesn't matter where I take it from because at the end of the day, it's all going to be recalculated as a total quantity and a total cost. So in this case, that's what happened. Boom. I proved that I made our purchase returns and allowances and I got my numbers here. Right? I don't have 500 anymore. I have only 485. Okay? All right. And I've already journalized it. Okay? So what has happened next on the same day? So here I indicated this is the same day but another transaction.
We sold 10 mugs,
For how much?
$10 each for cash.
Okay, so let me go ahead. I don't think there is sales tax. So yeah, so go ahead and do it without sales tax. Just make it a little easier. Or let me see if you'd like. Yeah, go ahead and calculate it without sales tax. Actually, that should be universal because we're selling it regardless. So I'm going to go ahead and just indicate here that you're going to assume sales tax is 8.25%. Okay, So there you go. So make sure that you do indicate that there is sales tax because this should be an in-store sale, especially down below. We do have an in-store sale. So let's go ahead and compute this next one. So you sold 10 mugs for $10 each for cash. Okay. So let's journalize this. On May 5th, I sold 10 mugs for $10 each for cash. So what am I going to recognize, or what account number or what accounts am I going to be using?
Cash.
We're going to be using cash. What else?
Mugs.
We will be using mugs, but right now this transaction is we're recording something else.
Sales tax payable.
We're going to do sales tax payable. Okay, what else? Sales. Good. So first off, we're going to recognize that we completed a sale. So what comes first?
Cash.
Cash. Yes.
Then sales.
Cash and then sales.
And
Sales
then
tax
sales
payable.
tax.
Okay. So I have to go ahead and grab those account numbers, sales tax, tax payable. Okay. And let's go ahead and take a look at my chart of accounts. So cash was account number 102. Sales tax payable is 230 and sales is 401. So again, cash was 102, sales was 401, and sales tax was 230. All right. So how much was my total sales? How many mugs did I sell, and for what price did I sell them?
10 mugs.
10 mugs at how much?
$10.
So therefore it should be $100. Okay. And then what is my sales tax on the $100?
$825.
$825.
$8.25. So how much cash should I be receiving?
108.25.
108.25. So here I'm going to make sure I indicate that I sold 10 mugs at $10 each. Okay. Now, am I done with this transaction here? No. What is my second journal entry that I need to complete?
Cost of goods sold.
You need to do your cost of goods sold. So good, cost of goods sold. And where is this cost of goods sold? Where is it going to be taking out of? What account am I directly correlating? Not cash,
Accounts
Okay.
payable.
not accounts payable.
Mugs.
Mugs, thank you. Inventory, because cost of goods sold is directly correlated with inventory. You only use the cost of goods sold when you're trying to get rid of or you're removing inventory, right? So that's one of the accounts. It's an expense account. You're constantly updating your inventory. So that's the one thing that you need to know is that cost of goods sold is directly correlated with your inventory. Okay? So here cost of goods sold is 501 and we're taking it directly out of our mugs for 150. Okay, so here, general journal, I'm going to go ahead and do mugs. So again, cost of goods sold was 501 and 150. Now, because I can do this right here, I'm going to pause here because I don't want to do calculations twice because right now I don't know what my number is. So what I'm going to do is now I'm going to go into my inventory worksheet and solve for my cost of goods sold. So here on May 5th, how many mugs did we sell?
10.
All right. At what price or at what cost per item am I going to use?
2.8, 85618.
Good. So in this case, I'm going to do my equal round because again, it's not a very nice number. So what is my total cost of goods sold here?
28.56.
$28.56. And of course, I'm going to go ahead and update my inventory right now. So if I had 485 and I sold 10 mugs, how much should I have left?
460.
475, okay? And same thing here, what's my total cost going to be?
1356.69.
1356.69. And lastly, what is my new average cost per item?
2.85618.
Okay, so good. Here it's changed by, again, another 10 thousandth of a penny. Here we go. We're going to eliminate with black. There you go. So now this is my new updated inventory information, and this is my total cost of goods sold. So I know that my cost of goods sold should be $28.56. So here, 28.56 on one end, and I also subtracted the 28.56 from my actual inventory, and I proved it by doing it in my directly in my inventory on hand. I actually got rid of and took out $28.56 worth from my inventory on hand, and that's how you actually compute the cost of goods sold, and that's how you journalize it. Okay. So in this one, you can choose to do either or when you're updating your inventory. So in this case, I'm going to make sure I sold 10 mugs. Okay. All right. So then let's see what has happened next on May 6th.
You sold 20 mugs, $10 each
To who?
to customer A on account.
And what else happened here?
Terms 10% and net 30.
Perfect. Okay. So how do we journalize this? So I'm going to go ahead and bring my chart of accounts. What accounts are we going to be utilizing?
Accounts receivable,
Accounts receivable. What else?
Sales.
sales,
Mm-hmm.
Sales tax.
Good. So accounts receivable is going to be account number 103. Sales tax is 230 and sales is 401. So general journal. So here we are. So May 6th. Okay. So we sold. So what account is going to come first?
accounts receivable,
Good. What came after that? What comes after that? Sales. Good. And lastly, what else?
Sales
sales tax
tax.
payable,
Okay. So again, account receivable was account number 103. We got sales as 401 and we have sales tax payable as 230. So let's go ahead and calculate this. So what was the total sales on this account? How many items did we sell? Let's go back to the scenario. We sold 20 at how much?
$10
$10,
each.
$10 each. So 20 times 10 gives you how much?
200.
200. What is the tax on that?
1650.
$16.50. And lastly, what is the total amount that customer A owes us?
216.50.
$216.50. So here I'm going to go ahead and make a note that I sold 20 mugs to customer A. And some important information was I gave them terms of a 10% discount if they paid within 10 days. If not, they have to pay in full within 30 days. Okay, so it's a good piece of information that I should keep in my journal because that's important information. Okay, now that I completed my sales, what else do I also need to have here as well?
Cost of goods sold.
Yes, so I'm going to save some time here. We also need to calculate our cost of goods sold because we actually don't have the cups anymore, right? We got rid of them, right? Because we sold them and we sold them on an account. So here we are, cost of goods sold and mugs. So I am going to go to my inventory worksheet and let's go ahead and solve for this. So 5, 6. So we sold a total of 20 mugs. At what cost per item is each cup going to be sold for?
2.8561895.
Good. And then what is my total cost of goods sold here?
57, 12.
$57.12. So again, I'm going to update my inventory, right? I no longer have $475. I subtract the 20 out of it. So how much should I have left?
455.
$455. And what's my total cost going to be?
$12.9957.
$12.9957. And lastly, what is my new average cost per item?
2.85618.
2.56197. Good. And I'm going to eliminate that. Okay. So then let's see what has happened. Actually, we have to finish our journal, right? We have 57.12 that we've sold. Okay, so here we're going to come over here, and it was for $57.12, 57.12. And then last thing is we need to put a little comment here saying that we sold 20 mugs. Okay, sold 20 mugs. Okay. All right, so good so far, so good. Okay. Any questions so far? Okay.
No questions.
Okay, perfect. Let's continue. What happened on May 8th?
We purchased 250 mugs at $2.75 with a freight cost of $50.
Okay. So 250, 275, and $50. Okay. And we bought it from Cuppy's Co. How did we pay?
On account.
All right. So here you have the choice because again, you can either lay down the foundation or you can go ahead and it's May 8th, right? May 8th.
Yes.
Perfect. Okay, so again, what I'm gonna do is just so that we can keep this nice and salt and quickly doing this. So how are we gonna journalize our purchase of inventory?
Inventory mugs.
Good. We're gonna have yes, we're gonna journalize mugs. And how do we pay for it?
On account.
On an account.
Accounts payable.
Good. So again, that is one inventory is 150 and your accounts payable should be 201. Now, this is where I'm going to go ahead and say, you know what? I don't want to have to double calculate. I don't want to have to double calculate. I'd rather just calculate it one time. So I'm going to go to my inventory worksheet and I'm going to figure it out and then enter in the information in my on my inventory work on my journal. So here I purchased 250 items at 275 with a freight of 50. Okay. 250, 275, and 50. All right. So what's my total purchase price here?
$687.50.
$687.50 plus my $50 freight gives me a total cost of
$737.50.
$737.50. And you know what? Since I'm already here, let's just update my inventory. So if I started with 450, or I'm sorry, 455, and I'm adding another additional 250, what's my total quantity here?
705.
705. What's my total cost?
$2,037.07.
Good. And lastly, what is my new average cost per item?
2.88946.
Good. All right. And I could go ahead and I can eliminate this batch right here as well. All right. So now my number that I'm looking for is going to be this 737.50. So I could go ahead and place it right here, 737.50. Okay. And I can also make a note here, right? Who did I purchase this from? I purchased this from Cuppy's Co. All right. I purchased 250 mugs at $275 each, and I was also given terms. So 5% if I pay within 15. If not, I have to pay the whole thing in 30 days. Okay. So there is my first entry there. Okay. Okay, so that's how I'm using the journal and then going back to my inventory worksheet to go back to my journal. I'm only calculating once instead of having to figure it out on my journal and then have to recalculate it again in my worksheet. If you like that better, then go ahead and do it. All right. So then what also happened on May 8th?
You returned 50 mugs for wrong color,
Mm-hmm.
and we offered 15% discount.
Mm-hmm. Okay. And what else? We accepted it, right?
Right, right.
Okay, so now this one is going to be, so how are we going to deal with a discounted item? Or in this case, we're attempting to return, but we don't actually return because again, the vendor convinced us saying, hey, brown mugs, black mugs, you could still sell them, right? They're still available. So how am I going to be journalizing this and etc.
Purchase returns and allowances.
Okay, so remember, what kind of inventory tracking method are we using?
Perpetual. It is big.
Perpetual. So in this case, where are my items located?
Inventory.
They are in inventory. So if I placed everything in inventory, where am I taking it out from?
This would be inventory.
It's going to be directly out of inventory. So again, we're going to lower our payments, obviously. And we're going to be taking it directly out of our mugs. Now, of course, in real life, obviously, you would take those black mugs and place them into another category. But for this one, this is just a general example. So we're just assuming that they're all just going to be in the same pile. Okay. So again, accounts payable is number 201 and my mugs is 150. So let's go ahead and go to my actual inventory worksheet. So in this case here, I'm trying to return how many am I returning? 50, right? 50 mugs because they were black, right?
Yeah.
How am I going to place this into my inventory worksheet here?
You take out from the inventory to hand.
Yes, we're going to take it directly out of our inventory in hand, but in this case, we are keeping the items, all right? But it's still going to cost me $2.75 each, right? So in this case, I need to just calculate a total as a total. So in this case, it's going to be negative 50 times your 275 to get you a grand total of your 137.50. That's how much it costs for you to return all those items. But what is the catch here? Did I fully return everything?
No.
So what did I return?
You just give discount.
Yes, we just got a 15% discount. So now I know that this is $137.50. If I were to do a full refund, how much is 15% of this?
20.6263. 2063.
Hold on, I lost my number here. Sorry. It is 137.50. 137.50 times 0.15. We get, did you say $20.63?
Yes.
Perfect. And of course, this has to be negative, so negative 20.63. So therefore, when we update our inventory, we obviously didn't change our number. However, we changed the total cost, right? We deducted from our inventory. So in this case, what is going to be my total cost now?
2016.44.
Good. And then therefore, my new average cost is going to be
2.86019.
good. And again, I'm going to come over here and I'm going to eliminate this batch right there. So here I know that from my discount, my 15% discount is going to be $20.63. So I'm going to go over here and it's for $20.63. Okay. And of course, I'm also going to make a note here that I returned 50 black mugs for 15% discount. Disc for short. Okay. All right. And we already updated our inventory here. All right. So then what has happened on May 10th?
You sold 30 mugs.
We sold 30 mugs. $10 each for what?
Cash.
Cash. So what are my accounts going to be? So I'm on the next page. So this is May 10. What are my accounts going to be?
Cash.
Cash. Right? What else?
Sales.
Sales. What else? And
Sales tax.
okay. So again, cash is 102. My sales is 401 and my sales tax payable was account number 230. So if I sold 30 mugs at $10 each, what is my total sales?
300.
All right? And then of course, what's my tax on that?
24.75.
$24.75, bringing my grand total of cash to be
324.75.
$324.75. And of course, I'm going to indicate here that I sold 30 mugs. Okay, good. Now, if I sold 30 mugs, what else do I have to do?
Cost of goods.
You
Cost
have
of
to,
goods.
exactly. We need to update our inventory cost of goods sold. And of course, where are we taking this directly out from?
Inventory.
Good, our mugs. Okay. Cost of goods sold was 501 and inventory is 150. So again, let's go ahead and solve for it over here. So we know that it is now May 10. We sold 30 mugs. What cost per item is it right now?
2.860198.
Good. So what's my total cost of goods sold?
$85.80. Mine.
I got 85. What's the digits after that?
85.8059.
8.059.
Yeah,
Okay, so because it's a 5, what's our assumption?
81.
It has to be rounded up. Okay. So here I have those numbers. So let's go ahead and update our inventory. So what's my new quantity?
675.
And what is my new total cost?
1930.63.
And again, last but not least, what is my new average cost per item?
2.86019.
Perfect. So this one changed not that much. Okay. So again, I'm going to eliminate that. And now I know that my cost of goods sold is for $85.81. So go to my journal, $85.81. Okay. And I'm also going to make a note here. It's redundant if you want to place sold 30 mugs right below this without having it above. That's completely fine as well. Okay. Okay. So good so far? So what has happened next on May 12th?
We sold 60 mugs at $10 each to customer B on account terms 10%, 10 net 30.
Okay. So we sold on an account to customer B. So what account are we looking at this time?
Accounts receivable.
Okay, good. So we actually are looking at accounts receivable. Okay, so May 12th, we have accounts receivable. Number 103. And what else are we recognizing?
Sales.
Sales.
Sales. And what else?
Sales
Sales
tax.
tax.
Good. So account number 401 and 320. So then if I sold, how many did I sell? I sold
60.
60 mugs to customer B. All right. And I sold it to him for $10 each. So what is going to be my total sales here?
600.
600. And what's my tax on that?
49.50.
49.50, bringing my total amount that he owes me to be
600.
$649.50. Okay, so again, I'm going to place some information here saying that we sold 60 mugs to customer B. Okay. And then, of course, if we sold mugs, what has happened here?
Cost of food.
Yes, we also have to remember our cost of goods sold. So I'm going to go ahead and copy and paste it from above. Okay, so let's go ahead and go to my inventory worksheet and let's solve. Okay, if I sold a total of 60 mugs, right? So date here is 5/12. I sold a total of 60 mugs at what cost per item?
2.8601926.
Okay, and then last, so what's my total cost of goods sold here?
171.61.
171.61. So therefore, let's update our inventory. So what's my new quantity now?
615.
615. What is my new total cost?
175902.
1759.02 is correct. And lastly, what is my new average cost per item?
2.860195.
Okay, good. So it changed by, again, another 10,000th of a penny. So there you go. So now I know for me selling those 60 mugs, it cost me $171.61. So I'm going to go back to my journal and I'm going to record that it is $171.61. Okay. And you can also cell reference this too if you have your inventory worksheets available. Okay. And again, I'm going to write sold 60 mugs to customer B. Okay. So then what has happened on the 15th of May?
Customer B return.
Customer B. I guess he didn't like the mug, so he decided to, or he said maybe he bought too many. So customer B decides to ask for a full refund for 30 mugs. Okay, so how are we going to grant him this? How are we going to journalize this if we're going to refund for a full refund for 30 mugs? Okay,
Purchase
so,
return.
okay. Now, is he the customer or is he a vendor? This is customer B, right?
Yeah.
So do we do purchases from customer B?
No.
No. What do we do instead?
Sales returns.
Sales returns. Good. So if you looked at your chart of accounts, let's take a look at it. What options do you actually have? You do have both purchase returns and allowances, but again, are you dealing with a vendor or are you dealing with a customer? In this case, we're not dealing with a vendor, we're dealing with a customer. So in this case, you have a sales and returns and allowances account. And of course, yes, you can use this for sales because again, this also applies to the concept where the going concern, right? No matter what given point in time, you're going to act as if you're continuing doing business. So sales is always going to be finite. As in, in order to reduce sales, you have to have a contra account for the sales returns and allowances. So in this case, it is account number 406. So sales, returns, and allowances for 406. Now, if we are returning items, what else do we have to return on top of that?
Tax.
Yes, we need to return the sales tax. Okay. And then lastly, how did customer B even pay us?
On account?
Yes, so we have to reduce the amount he owes us because he didn't pay us yet. He owes us money, so now we got to reduce the amount that he owes us. So again, 103. So if I am making my sales returns, right? If I am returning 30 mugs, what was the original price I sold it to him for? $10. Good. So how much tax am I subject to have to give it to return or refund?
$24.75.
$24.75. So how much in total value am I going to decrease the amount that customer B owes us?
$324.75.
$324.75. So in this case, I'm going to go over here and say customer B returns 30 mugs for full refund. Okay? All right. Now, because he is going to be essentially returning our items, what else do we need to include?
Inventory?
We need to return the stuff back to inventory. So therefore, we need to increase our inventory because we got our mugs back. Now, of course, in real life, you wouldn't place it back into the original mugs account because they've been used, they've been touched. You don't know. Maybe the customer he thought that he was going to use them all, so he washed them all. But instead, he decided to not do it. Or maybe he took out half the batch and now he's just returning it because he doesn't need it anymore. So in this case, you're not going to actually place it back into the inventory itself, but for this equation or for this essential example, we're just going to assume we only have one account. So we're going to place it back in there. So if we are going to place it back into our mugs, what do we have to also undo?
Cost of goods sold?
We have to undo our cost of goods sold. Okay, so let's go ahead and go to my inventory worksheet. And because we do have a section for the cost of goods sold, you're just going to place it here. We're subtracting 30 out of our inventory, right? So therefore, how much should it cost us right now?
2.860191.
Correct. So then how much are we actually returning back to our inventory?
85.81.
85.81. So therefore, we're actually going to add this amount back into our inventory because we're essentially returning back our stuff here. So in this case, I'm going to add back my 30 items. So I should have,
645.
oh, double negative doesn't work.
645.
Yeah, 645. And then lastly, what is my new total cost now?
$18.44.83.
1844.83. And lastly, what is my new average cost per item now?
2.8602.
Good. So now it has changed by, again, 10,000th of a penny. Okay. So now we actually have 645 available now in our inventory. All right. So any questions in regards to why we're doing this? So when we made a purchase returns and allowance, we updated our inventory. When someone made a sales returns and allowances, we still updated our inventory because we essentially got our inventory back. So that's how you do it when you're doing a perpetual inventory. It's just the same way as calculating every purchase that you make, every sale that you make, every purchase returns you make, and every sales and returns you make. Okay, well, depending if you actually got the inventory item back. So in this case, that's exactly how you're going to calculate your inventory. You're constantly moving, especially with moving average. You're constantly moving down the line. You're recalculating the average cost, and every single transaction that occurs that deals with inventory affects it in every single way, right? So we got to take a look at example so far, all of those information. So here, I'm going to go ahead and indicate that customer B returned 30 mugs. Okay. So then what has happened next? On May 18th, actually, sorry, the same day, May 15th.
We sold 25 mugs at $10.
We sold an additional 25 mugs at $10. Okay. So I'm going to go ahead and journalize this. So on May 15th, okay, what did we sell it for?
Cash.
Cash. Good. What accounts are we also going to recognize here?
Okay.
Sales.
Sales and what else?
Sales tax.
Sales tax payable. Okay, so account sales is 401. I'm sorry, cash is 102. Sales is 401. Sales tax payable is 203. So if I sold a total 25 items at $10, what's my total sales here?
$2.50.
$2.50. I'm gonna double check I didn't increase the price. No, $10. $25 at $10. Okay. So then how much tax am I gonna be collecting?
2063.
2063. And then lastly, how much cash am I actually collecting?
270.63.
Good. All right. And again, I'm going to go ahead and indicate that I sold 25 mugs. Okay. What else do we also have to include?
Cost of goods sold.
Yes, we got to also update our inventory. So cost of goods sold. And we are also taking it directly out of our inventory, mugs. So account 501 with 150. So let's go ahead and solve for our cost of goods sold. So for 515, we sold 25 mugs. How much is it going to cost me right now?
2.860216.
Okay, and then what is my total cost of goods sold here?
71.51.
71.51. Okay, so let's go ahead and update our inventory. So how much should I have left on quantity?
620.
620. And what is my new total cost?
1773.32.
Good. And lastly, what is my new cost per item?
2.86019.
2.060. Good. There you go. And again, I'm going to eliminate this one right here. Okay. All right. So then what has happened next?
Customer A paid in full with cash.
Hold on. We sold
Wait, where were we?
25 mugs. Okay, well, I have to update my journal now. So if I sold my 25 mugs, how much did it cost me to sell them?
71.
71.51.
Good. So 71.51. So let me finish up my journal here. That I sold 25 mugs. Okay. So let's go ahead and explore the last one and then we'll stop here. So here so what happened on May 18? You said customer A paid in full with cash, right?
Mm-hmm.
So let's go ahead and take a look. When did customer A actually purchase stuff from us?
6th.
May 6th. Now, did customer A return anything?
No.
No. Okay. Last question that we have to ask now is, did we give customer A terms?
Yes.
And did they meet the terms?
No.
No.
Okay, so we gave the terms 10 days, right? 10 days. They barely made it. They missed it by 2 days. So in this case, no. That means customer A is going to pay in full with cash. Okay, so let's look at customer A. So transaction, so on May 6th, so let's look at our transaction on May 6th. May 6th is right here. So we have an accounts receivable for the full amount for $216.50. All right, and they're gonna pay us in full, so $216.50. So I'm gonna go over here, and how am I gonna journalize it? So I'm on the next page now. So how am I going to journalize that this customer paid off what they owe us?
Accounts receivable.
Accounts receivable where?
Debit cash and credit accounts receivable.
Correct, because we received cash, right? So we're increasing our assets. However, there we are decreasing what they owe us. Okay? They didn't get any discounts, so they're gonna pay us in full for the $216.50. Right? Is it $216.50? Let's see. $216.50. So there you go. So $216.50, and I'm gonna go ahead and write here that customer A paid in full. Okay. Of course, the accounts here for cash is 102, and the account for accounts receivable is 103. All right. And then let's finish up the 18th, and then we'll stop here and then finish the rest up tomorrow. So on the 18th, what else happened on the 18th?
We sold 50 mugs at $10.
For cash. Okay. So we sold another 50 mugs at $10 for cash. So my journal is going to look like How am I gonna how am I gonna journalize this?
Debit cash.
Cash, yes. What else?
Accounts receivable.
Sale,
Sales.
Okay, sales, and then lastly,
sales
yes.
tax.
Okay, good. So again, cash is 102, sales is 401, and accounts, sales tax payable is 230. So if I sold a total of 50 mugs at $10, what is my total sales?
500.
And of course, how much tax am I going to be collecting?
41.25.
41.25. Therefore, how much cash in total am I getting?
500.
541.25.
541.25. And again, sold 50 mugs. Okay. And of course, what's the last thing I gotta do?
That's the good sold.
Yes, you have to update your inventory. Okay, so again, inventory worksheet. We are still on the 18. So how much did we sold? We sold 50. At what price did it cost me?
2.8601.935.
Okay, so then what is my total cost of goods sold?
143.01.
143.01. All right. So let's update our inventory. So what's my new quantity?
570.
570.
Mm-hmm. And what's my new total cost?
1630.31.
1630.31. And because Excel knew that the cost per item is going to be calculated, so what is it?
28601.930.
Yeah, so it didn't change by that much. All right. So there you go. Now, new piece of information I have is that it cost me a total of 143.01. So here, cost of goods sold, 143.01. Okay. And of course, I'm going to add my description here that I sold 50 mugs. Okay. So I'm going to stop here, and then tomorrow we'll go ahead and finish up so we finish up from the 18th. So we're going to start on the 20th. So we'll continue all the way throughout. So again, good job, everybody. And if you guys don't have any other extra questions, then you guys are free to go. So again, tomorrow we will finish this up.